Good day, and welcome to your daily global economy update. Here are the top economic and market stories making headlines around the world. Markets kicked off the week in a state of cautious suspense. Investors are bracing for two major events: the release of key U.S. inflation data and a high-stakes diplomatic summit between the U.S. and Russia. That uncertainty put a damper on global stocks and nudged long-term U.S. Treasury yields lower. We're seeing a clear wait-and-see approach, with traders trying to avoid big new bets. This defensive mood is reflected in the outflow of nearly $7.8 billion from global equity funds in the last reporting period, as investors sought safety in short-term instruments. The message from the market is clear: any surprise on the inflation front or from the diplomatic table could flip sentiment in a heartbeat. But against that cautious backdrop, a current of long-term optimism is running through Wall Street. Two major investment banks, Citigroup and UBS, have raised their year-end targets for the S&P 500. Citigroup is now calling for 6,600, with UBS targeting 6,100, both citing the resilience of corporate profits and fading risks from central bank policy. This tells us two things. First, analysts believe strong company earnings will ultimately win out over short-term political jitters. But second, it highlights the market's current split opinion. Investors see potential for broad upside ahead, but the path there will likely remain choppy. Meanwhile, there was a sharp move in the gold market today. Bullion tumbled about 2.5% to settle near $3,400 an ounce. The trigger was a clarification from the White House, confirming that imported gold bars would not be hit with tariffs. While the news removed an immediate threat, the episode was a stark reminder of how quickly political headlines can rattle even safe haven assets. For the global commodity hubs that refine and trade bullion, it was a stress test showing just how fragile pricing can be when policy is unpredictable. Now let's take a quick look at other major headlines from today. In the oil markets, prices are holding steady, with Brent crude trading around $65. Traders are squarely focused on the U.S.-Russia talks for any signs that could impact supply. On the currency front, the U.S. dollar remains soft. Markets are increasingly pricing in the likelihood of Federal Reserve interest rate cuts later this year. And in emerging markets, Colombia provided a bright spot, posting solid second-quarter growth of around 2.6%, helping to ease fears of a regional slowdown. So, the key takeaway for today: investors are playing defense in the short term, but many are still keeping an eye on long-term growth. That's your market wrap. Thanks for joining us. For your daily dose of global economic and finance news, please subscribe, like, share, and comment. See you tomorrow.